You've got your retirement account growing slowly, maybe some individual stocks you picked based on Reddit threads or YouTube tips. You're doing better than most, but you're watching billionaires somehow consistently beat the market year after year while your picks feel like coin flips. Here's what you believe: good research and diversification will get you there. That's not wrong, it's just catastrophically incomplete. I've spent years tracking what the smart money actually does, and here's what shocked me. When I analyzed the portfolios of 15 top billionaire investors, the same names kept appearing over and over. We're not talking about minor positions, these are core holdings that represent serious conviction. Take Amazon, for example. 9 out of 15 of these investors hold Amazon as a significant position. That's not coincidence, that's pattern recognition at the highest level. But Amazon isn't even the most interesting part of this story. While retail investors were panicking about Meta's metaverse spending and calling it dead money, 8 out of 15 billionaire investors were quietly accumulating Meta shares. They saw something most people missed: a company trading at a massive discount with a money-printing social media business funding their future bets. The pros weren't buying the hype, they were buying the hate, when everyone else was running scared. Warren Buffett has a saying about this exact scenario, and it leads us to the next pattern that'll blow your mind. Here's where it gets weird. IEP, Carl Icahn's energy company, shows up in 7 out of 15 portfolios. Most people have never even heard of this ticker, yet billionaires are loading up on it like it's the next Tesla. This isn't just following Icahn blindly, these investors see something in the energy transformation that the mainstream media completely misses. They're positioning for a shift that's already happening but hasn't hit the headlines yet. But that's not even the most obvious pattern in this data. Google and Microsoft each appear in 7 out of 15 billionaire portfolios, and here's why that matters more than you think. These aren't momentum plays or flavor-of-the-month picks, they're infrastructure bets on the future of human productivity. When Ray Dalio and Bill Ackman both own Google, they're not betting on search ads, they're betting on AI dominance and data moats that competitors can't replicate. Microsoft tells the same story from a different angle: cloud computing and enterprise software that becomes more valuable, not less, during economic uncertainty. The pattern here reveals something crucial about how billionaires think differently about risk. While everyone was chasing Nvidia's AI story, 6 out of 15 billionaire investors were quietly building positions in Broadcom, AVGO, a name most retail investors can't even pronounce correctly. Broadcom makes the chips that make other chips possible, and these investors understand something fundamental: in a world running on semiconductors, you want to own the pickaxes, not just the gold miners. Meanwhile, Nvidia appears in 6 portfolios too, but here's the twist: they're not buying it for the reasons you think. Micron Technology, MU, might seem like a boring memory chip company, but 5 out of 15 billionaire investors see it as something else entirely: the foundation of the AI revolution. Every AI model, every data center, every autonomous vehicle needs massive amounts of high-speed memory. While everyone's focused on the sexy AI software companies, these investors are buying the hardware that makes it all possible. It's the same contrarian thinking that made them billionaires in the first place: find the essential component everyone overlooks. Here's what this data actually teaches us: billionaires don't chase trends, they identify inevitabilities. They're not buying these stocks because they're popular, they're buying them because they solve problems that aren't going away. Amazon dominates logistics and cloud infrastructure. Meta owns human attention. Google and Microsoft control information and productivity. These aren't stock picks, they're civilization bets. The question isn't whether these companies will be bigger in 10 years, it's whether you'll be positioned to benefit from that growth. Your action steps this week: first, look at your current portfolio and ask yourself, am I buying trends or inevitabilities? Second, research these 5 core positions and understand why smart money keeps accumulating them. Third, consider starting small positions in 2 to 3 of these names rather than trying to time perfect entries. Fourth, set up a system to track billionaire portfolio changes quarterly, not daily. The money that changed my perspective on investing forever came from thinking like an owner, not a trader. Ready to dive deeper into what the smart money is really doing? Head to nexusaicalls.com for our latest market analysis.